Hi everybody, my name is Mary Redmond and I'm talking about the Australian dollar versus its main counterparts for the carry trade, which are the US dollar, the Japanese yen, and the Swiss franc. So we also have to look at the US dollar index, and that made a particularly bearish close. It really doesn't look encouraging for the bulls on Friday, but you also have to consider something else, that the stock market made a big move down on Friday, and for the week the stock market broke out of its long-term upward trend, which is really a year-long trend. Now that's probably because most of the fund managers who are major institutional buyers of stocks are looking at what's going on, and the fact that the quantitative easing is scheduled to end in June means that that big cushion of liquidity under stocks is just not going to be there anymore. So there's some question in terms of whether or not it's going to end this week. They have a tranche scheduled to end June 12th is the last day. And after that, we'll have to wait and see if the Fed continues to do this for a couple more weeks, or if that is actually the end. But one way or another, the second round of quantitative easing is going to stop at the end of June. And that's also the end of a quarter. So fund managers could have a profit for the last year, the last 6 months of, up to 30%, because it's what the S&P has rallied. So they're most likely going to be looking at taking a profit, and that's going to cause some liquidation in the stock market. It's going to be very difficult for the Australian dollar to sustain a true upward trend against these other currencies if the stock market's in a real downward trend or a bear market. And it looks like that's what we've got now. It looks like we've got a downward channel on the S&P. So as long as that stays intact, I would prefer to short the Australian dollar on moves upward. So it looks like the Australian dollar, US dollar, actually spiked up out of its channel, the new channel that it's formed. And I think there was some indecision in the markets on Friday because the employment report was slightly weaker than had been previously anticipated. So there were a lot of people speculating about whether or not there's going to be QE3, and there was also the low liquidity factor from 4 central bank meetings this week. So I think there was the action on Friday may not be the start of a new trend. And we saw the dollar index close down and the stock market close down, but it's really too soon to say whether or not that's a trend. And of course there are some factors that are weighing on the US dollar right now. There's the delay in Congress's improving the debt limit. There's also the rating agencies threatening to downgrade US debt, so that may be putting some pressure on the dollar. But nonetheless, this is still within its downward channel, and it hasn't really formed an upward trend on the particular pair, the Australian dollar, US dollar. Now you can look at the Australian dollar, Japanese yen, which is another interesting one. That did appear to make a break out of a very tight wedge that had been forming. So the question is this going to be a real break or a false break? Well, we probably won't know until after the RBA meeting on Tuesday. And in addition, you've got the Australian dollar to the Swiss franc, which I like. That one actually looks like, if you look at a monthly chart, the Australian dollar to Swiss franc, well, it's been an intense downtrend the last couple of weeks. Monthly, it's actually got a break below this important trend line to be in a true downward trend. So these are the 3 pairs I'm going to look at for this week, and I would favor the downside unless the RBA is exceptionally hawkish, which probably won't happen. I mean, we've seen some slowing in the economic growth worldwide. The employment report in the U.S. indicates that the U.S. is, not in the type of robust growth which would cause the Federal Reserve to raise rates. But we've also got some uncertainty about the extent to which the floods in Australia are going to impact their growth going forward. And the RBA, as well as the Australian government, has played that down to a degree. But there's still some uncertainty with that. And in addition, we have a contraction in some areas of the housing market in Australia. So nobody knows, whether or not that's going to be a contraction which could last a couple of years, or whether or not it's just a minor cyclical correction. but we also have to keep an eye on Australian housing prices going forward. So in addition to the bearish break in the S&P, you can also see that copper prices are in a downward channel now, and copper producers are starting to hedge, and this is probably due to the fact that they may be anticipating slower growth from China. I mean, we've had 6 months of very aggressive rate increases and increases in the reserve requirements from China. So they've already seen some slowing, and they may continue to raise rates, but these producers look more of the longer term, 6 to 12 months down the line, and we could see a real contraction in growth in China. And you've also got, in addition to looking at the S&P and looking at the precious metals, you can also take a look at the chart of the banking index in the US, and it really looks very discouraging for the bulls. I was just saying that financials lead the market up and down. Well, this doesn't look like they're going to be leading the market up anytime soon. It looks like it's a real downward move in the banking index. So the RBA decision is going to happen on Tuesday. It's really probably not such a good idea to place any trades before that. But as long as it doesn't come in, and as long as they don't talk about imminent rate hikes, and there's some uncertainty, then I would favor shorting these pairs. So it looks like the 107.5 was a decent level for shorting the Australian dollar, US dollar. If there's any movement upward in the stock market and downward in the volatility index, I would still favor shorting it above 107. The Australian dollar Japanese yen is a pair that's a little bit trickier, but it generally moves very closely with the stock market. So if you see a downward move in the stock market, it's very highly probable you're going to see a downward move in the Australian dollar Japanese yen. And we did have a break out of this channel, and then it spiked back up again. So I might favor shorting it around the top of this, which is around 86.4. And the Australian dollar to Swiss franc, that's been in a bearish trend over the last, really the beginning of May. It's been in a very bearish trend. But of course you don't want to chase it lower, and it still has to break below that monthly trend line before it would be in a true bearic trend. So I would probably favor shorting this up around the 90 level. You've also got the volatility index, which is very interesting because we did see a correlation between the Australian dollar and the volatility index again on Friday. The VIX spiked up out of its normal trading range. It spiked up to the 19 level, and you did see that that was a buy for the Australian dollar. So we'll have to see this week whether or not that momentum carries forward at all. Because if you have any type of move down in the volatility index, that could be a short again for the Australian dollar. But looking at the way the stock market closed, it really looks as if we're in a true bear market. So are we going into a true bear market? So what you want to do there is short the rallies, and that's the type of trade I'm going to be looking forward for the Australian dollar for this week.